Good evening, VV Nation. My name is Ryan, Senior Instructor here at VectorVest, and welcome to the channel. Now, in tonight's presentation, we are going to cover gold. Now, I'm no expert in gold, to be honest. I actually trade options, mostly on tech companies. However, there's been a lot of buzz about gold lately, mostly because of the Israeli conflict, war in the Middle East right now. Gold is naturally seen as a safe haven. Thus, we have seen a quick burst over the last week or two in gold prices itself, bringing up the stocks and the industry as a whole. However, I'm going to dive more into the analytics of gold, not going to go in the history and the currencies and all that stuff. I'm going to keep to the data. Now, the test period that I'm going to focus on most importantly is from April 2021, which is when inflation went above 2%, to today. And the reason why I'm testing this time period is because we now have two wars within the world, and in addition, we have inflationary pressures. So, naturally speaking, gold should be soaring. Is it doing that? Well, we're going to find out. In addition, I am going to look at some other alternatives besides gold and see how they have performed and really see if gold is the place to be when it comes to these uncertain times. Now, if this is something that you're interested in, give me a couple minutes of your time because I'm telling you, we're both about to learn how to play gold and how to play the current market condition. So let's get started. Now, to kick this video off, the first thing I'm going to show you is just gold bullion itself. Now, this is the price per ounce in US dollars. I do have the chart up since 2021. If we take a look at the beginning here, right around April, we see that the price is at $17.55. Now, today it's standing at $19.51. One thing I do find very interesting about this graph, it's actually pretty volatile. So if I'm putting assets into what's supposed to be a safe haven, this seems like a lot of volatility for my portfolio going forward. However, a couple key things I do see about the behavior of this chart, just taking a look here, right at the beginning when inflation became a problem and persistent over that 2% mark that the Federal Reserve likes to keep it below, we do see the price action of gold here going up quite a bit with some selling pressure coming in and then a steep sell-off to follow suit. However, the next item to bring gold prices to the high over this chart was actually the war going on in Ukraine. When Russia announced that they were invading Ukraine back in February 2022, we could see the price action of gold here climbing very steep. However, again, a lot of profit taking place with a steep sell-off to follow suit. Now, the most recent example here, if we zoom in, now here's gold since the beginning of this year. We can see here price action is higher than it was back in January, ever so slightly. However, some volatility in between. We can see that the price action just coming off this recent swing low, finding a level support where we were at back in March of 2023. However, since then, in addition to finding that level of support, we did get an announcement that there was going to be another war going on in the Middle East. So between both of these geopolitical and technical events, we could see the price action of gold in a blast-off phase right now. However, it is starting to hit a level of resistance. Now, after breaking down this chart, I do see a correlation between gold and inflation and geopolitical events. However, those gains are typically short-lived. So let's jump into the VectorVest 7 software and let me show you some other charts to really find out if gold really is a natural safe haven. All right, right behind me, I do have a list up right now. We have several ETFs. We have 3 of them. The reason why I chose these ETFs, because they're each different in nature. Now, there's many different ways to invest in gold. So right now we do have the GOEX, the Global X Gold Fund. This actually tracks the explorers. Now, in addition, I do have a Gold Miners Index, GDX, and I have GLD, which tracks spot golds itself. In addition to that, I have 6 other companies here, all in the gold mining space. Now, the first thing I want to look at is the safety. Now, gold is supposed to be a natural safe haven, so I'm kind of surprised that this list here has an RS collectively actually just at the threshold of 1.00. So it's not a favorable rating, not necessarily a bad rating, but for a safe haven, I would expect a better safety factor when it comes to being assessed by the VectorVest 7 system. So let's jump into the quick test and show you the performance of gold. So I'm just going to hit the quick test button here. Now here I have changed the date from April 5th to October 9th. Again, April was when inflation started to get above that 2% level, which the Federal Reserve, as we all know, have raised interest rates to combat inflation ever since. So let's just run the test here and let's just see how this list actually would have performed. Here's the results from the list of the 9 equities that we tracked here dealing with the gold space. Only 4 were winners while 5 were losers. Again, this test is from April 5th, 2021 till today. Now, there are some big winners in this list here. If we see AGI, LUGDF, GFI, big winners from 35% upwards to almost 57%. The only ETF to go positive during this time frame is actually GLD. Again, that tracks spot gold. It is up 11.83%. The rest here, all negative. HMY slightly negative. The big losers here was the Gold Explorers Fund, the Global X Fund here down 23%, and KGC down almost 24.5%. Now collectively, these stocks actually did go up 8%. Now, if we compare that to the NASDAQ here, the IXIC, since a lot of people, a lot of subscribers, a lot of people that watch this channel are holding tech companies right now, and a lot of them might be feeling the pain while holding these stocks since the last year and a half. Now we see that the IXIC or the NASDAQ is down just shy of 3% as of today. Now I do want to compare this to a couple other things just to see how other indexes would have held up. So let's just compare it to the SPY. For the S&P 500. Now the S&P 500 is up at 5.62%. However, gold still outperforms the S&P 500. In addition, let's track the broad market. And the way I'm going to do that is through the VVC or VectorVest composite. Again, that is an arithmetic indexed average of over 9,000 stocks that we are currently tracking. Now that result is down almost 15%. So you can see that between the NASDAQ and the VectorVest composite being negative during this time frame. However, the S&P is up slightly at 5%. Gold still outperforms during these times of uncertainty. Now, the one thing I will take away from this is be careful if you get into gold ETFs. Some of those do not work out so well, as we can see here through this time period. Now, there might be some quick swing trades that you can make with these ETFs. However, I like GLD. Just because of the consistency and being up 11%, that itself has doubled what the S&P 500 did and remarkably better than the broad market or the VectorVest composite, even the tech stocks being the NASDAQ itself. All right, the first chart I showed you was spot gold itself. Now, we did find out coming from the quick test of testing several ETFs and stocks themselves being in the gold space that the spot gold ETF GLD was the winner when it came to the ETFs. In addition, we did get mixed signals from the companies themselves. However, there were some really big gainers. So here's a chart of HUI, which is the Huey Gold Bugs Index. This is what we utilize at VectorVest to track the gold space itself. You can see here, since it's hit its high back on May 4th, 2023, a clear downward trend. So I did put on a trend line here. Nice price action breaking that trend line just earlier this week. In addition, we do have some proprietary indicators on this graph. The first being our stop price here. We do take a 10-day moving average of the stop price being a green line and a 65-day moving average to give us a sense of trend and direction. Now, one thing I do like here that 5-day is converging closer to that 65-day moving average, showing us that this downward trend is starting to lose momentum. In addition, if we take a look at RT or relative timing, this looks at the short-term price trend. As well, we did take two moving averages here. We do have a 5-day moving average and a 40-day moving average of RT. Now, using this date line here, we can see that the 5-day did cross above that 40-day back on the 12th of October, giving us a preliminary signal that the short-term price trend was now in our favor. And in addition, if we look at RT itself on that day, it was at 1.03, showing us that the short-term price trend is now in our favor when it comes to gold. So gold has been on the move for the last 2 weeks, so I'm going to add support resistance here and just see where we can find some resistance levels coming into place. And as I expected, this prior swing high here at 232.67 is the level of resistance. Right now, price action is just at 228.38. Therefore, I'd like to see this level of resistance taken out just to give me more confirmation to the upside, especially if you haven't already opened up gold positions or thinking about opening up new positions. I just want a little bit more confirmation to the upside, especially with this candlestick formation yesterday. We do see a lot of selling pressure with that high upper wick. However, we did get a fresh new buy rating on the Huey just within the last couple days. Thus, if you want to take a more aggressive approach with the 5-day crossing above the 40 right now, that does seem appropriate. However, a little bit more conservative, I'd like to see that 5-day cross the 65-day moving average of our stop price and or the price action of the Huey going above this level of resistance at 232.67. Now, I was going to show you a chart of Bitcoin from that April 2021 time frame till today. However, I just don't want to bore you with another chart. So I'll tell you right now, Bitcoin, or digital gold as it is, a safe haven from fiat currencies, is down almost 50%. At that time, it was hovering just above 55,000, and right now you can catch it around 28,000 depending on the day. Now, right behind me, I do have some gold stocks up that I truly believe in. In addition, I do have GLD, the one ETF tracking spot gold that I feel comfortable in investing. In addition, down at the bottom, I do have JNUG in this list. As I stated before, gold seems pretty volatile, at least from the chart, since 2021. Thus, if you're trying to take short-term profits and look at gold as more of a trading asset, JNUG may be your play as it is 2 times leveraged. Now, in tonight's video, I didn't have time to go over thousands of years of history when it comes to gold and economics. I really just wanted to make the simple point of, is it still a safe haven? Which we did some quick tests comparing it to the S&P, the NASDAQ, even Bitcoin. Bitcoin being a digital gold asset, supposedly, which is down 50%. However, gold itself did outperform the markets since April of 2021 when inflation became rampant. Now, with inflation still lingering and ticking up over the last 2 data reports, as well with geopolitical tensions, I feel that gold is a good place to be. So I hope you enjoyed tonight's video, and please don't forget the like button and subscribe to our channel. Have a good night.
Hey VV Nation, did you know that there's 7 deadly sins that can keep you from consistently making money in the market? If you would like to know more about those sins, and if you are falling victim to any of them, he goes right now to www.vectorvest.com/YT7sins to get your free report. You don't want to miss out on this, so do that right now.
Yeah.